Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the sentiments have turned weak for the markets. Remember what looked like a fair day of green throughout the course of the turned week, barring FMCG. That's the only sectoral gainer in the trade today. Rest all of the spaces have slipped. You can look at how sharply did the Nifty Bank also slide, and a lot of it also had to do with the US futures opening in lower and indicating a lower start for the US economy later tonight, and that's also one of the key reasons why the sentiments turned sour. We have a sharp fall on the oil and gas segment as well today. About 1.8% of a fall is coming in. So the oil and gas space, which was being seen as beneficiary of the crude oil prices, is now seeing some pressure build up because of the domestic news that's coming in. We will talk about that as well. Realty, PSU banks are the other top losing sectors with 1.8, 1.7% losses. Broader markets, the small caps have slipped 1.6%, and so have the mid caps down by 1.4% as well. IT, private sector banks, you talk about metals, auto, these were the better off pockets in the morning trade, but they've all given up their gains. Media, FMCG, the only two indices that are holding up with just 0.2% higher for the FMCG. India Wix about 3.4% up at 13.9. Even the PSU index is now down into the red, barring just a select few stocks. Power Grid, for instance, is still holding up, but over a percent loss for even the PSU stocks is what we are seeing. Let's actually welcome our guest on board to really understand and make sense of what has really happened on the D Street thus far and what can we expect going forward from here. We're joined by Mr. Abhishek Basu Malik. Warm welcome to you, sir. He's from IntelSense Capital. He's the founder of that company. Warm welcome after a long time that we are seeing you on Business Today Television, sir. You clearly have been witnessing, you got the time to really analyze what happened in the last 5 months of pain, signs of recovery that emerged last week, and then we are back looking at some gains being sold off yet again today. How have you assessed the situation thus far, and what do you foresee for the markets from here on, sir?
First of all, good afternoon to you and all your viewers. I think we've, like you said, we've seen, a pretty large fall across the board, mid caps, small caps, large caps over the last 3, 4, 5 years, 5 months. And only in the last week did we see some recovery, last 4 days. And I think it's natural because now the sentiment in India is weak. So it's natural that whenever you get a bounce, you get some kind of sell off in that. So it's sort of expected that the turnaround and the resumption of the bull phase that we were in will see these kinds of short bursts of run up and then some days of profit taking. So we are now in a sort of phase where I think, and I could be wrong, that we are sort of in the beginning stages of the next stage of the up move in the markets.
Okay, we are in the initial stages of the up move that we could probably foresee going forward. But what is the kind of confidence that you're getting into the markets? Will it be a recovery that will, take a lot of time? Basically, will it be a slow, gradual, time-taking move on the higher side, or the one that we had seen it in the last part of the rally, where every month, every day, every week we celebrated some new high in the markets as well, and that's what the retail investors actually have been used to of watching in the recent times. And these last 5 painful months have really tested the patience for a lot of them. We've seen SIP, accounts getting shut. We've seen the contraction in the flows as well. So some of them initially are already losing in some confidence, whereas others, we have to really hope as to find out whether they can continue to still believe on the long-term India growth story. But I want to understand, how do you think the recovery will pan out going forward?
Yeah, I think it's not, it's not possible that the markets will keep making new highs every day. Like what I mean, that is the phenomenon of a late stage of a bull phase, right? That's what we saw. We saw a healthy correction. Now we are probably getting into the next phase, and the beginning of any, bull phase. A lot of people have question marks. Exactly, like the questions you asked. I mean, nobody is sure that. Things are going to go fine. There are a lot of question marks in terms of macros, in terms of fundamental numbers, in terms of news flow. And only in circumstances like these where things are a bit muddy, you're not very sure, does the bull phase really start, and then the up move picks up momentum only when the news flow, the fundamentals all align with this. But it never begins like that. The beginning is always under circumstances which are sort of dire, and I think that's where we are. All the news flow that we see are where people are asking questions, they're not sure. Even for example, I'll just give you an example. Like you mentioned, the markets are today falling off because cues from the US. So now, I mean, till a few months back, we were worried that the money is going to flow out of India into the US because the US markets are doing well. Now we are worried that if the US markets fall off, will we fall off together with them? So, it cannot be both ways, right? I mean, there will be some kind of a sentiment, but ultimately, all markets run because of their own, underlying reasons, whether it's fundamentals, macros, liquidity, and ultimately that is what is going to play out. I think, emerging markets, India, China, we are poised to do well for the next few years. This is the interim period. This period could last 3 months, 6 months, but people who are long-term investors, these are times when you actually start looking at getting in.
Okay. Wanted to also extend this conversation to understand a bit about the mid and the small cap space. Also, Mr. Basu Malik, how are you really looking at this space? I mean, mid caps have corrected 21% from their peak. 24% of a decline is what we've seen on the small caps as well. Both have entered into a bear market phase. Remember, in the last year we were discussing that how there was a lot of talk of froth, excesses in this space. Have those largely been taken off or been taken care of completely, or is there still a lot of pain that we need to witness further before the cleanup clearly happens? How would you really look at the mid and small caps right now?
See, the challenge with mid and small caps is that, especially unless you are in a roaring bull market where everything goes up, you have like 5,000 stocks, for example, out of which probably 70-80% would be mid caps and small caps, right? So the numbers are so large. Ultimately, you have maybe 400, 500, maybe 8, 900,000 companies at most, uh, where they have good businesses, where there's growth, etc. So ultimately, whenever we are talking about mid caps, small caps, it has to be very, very stock specific, sector specific that we talk about. Even today, even after this fall, there are pockets where valuations are still high. Uh, but ultimately, I think what you, as investors, we need to look at is not only valuations but also growth. So you need to have that kind of a sort of match between good growth over the next 1 to 2 years and where you think valuations are reasonable. A lot of times you'll not find great growth stories at mouth-wateringly cheap valuations, right? So that is the trade-off that we need to make as investors. But yes, there are a lot of opportunities that have come up because of this fall in the mid and small caps. But you need to be picky, right? You cannot just go and buy a basket of mid and small caps and hope that it will do well.
Fair point. In this recovery or the one that you're expecting to happen from now on, where are the pockets that actually are giving you the confidence to start putting in fresh funds after the carnage that we've already seen? Where do you think the first signs of rebound will actually start to take place so that the investors can actually stay ahead of the curve and probably look at the right pockets to invest in?
I think we have to look at places like I said where there is the growth is expected at least in the next 2 years. So good pockets to watch out is the manufacturing space. Manufacturing, I mean, entire end-to-end spectrum. So it could be chemicals, it could be pharma, it could be the entire CDMO kind of space. Uh, that's one. Then you have the defense manufacturing, capital goods, engineering. So that's another space. Just look at the amount of spending that is expected from Europe in terms of defense. A
Yes.
large part, or I don't know if it's a large part, but a part of that will probably get outsourced to countries like India, right? So an interesting play to look at are European companies, European manufacturing companies, which have an established presence in India, right? So when you look at them, it's an easy call for them to, from the headquarters to say, okay, now we will do this part, get some part of this made from India.
Yeah.
So those could be interesting areas.
Okay, so manufacturing, capital goods, defense is something that one can definitely look at. In the same breath, how would you look at railways, sir, which have been showing us some signs of a bounce back over the last few days? Does this also give you that confidence of the domestic story returning and the erstwhile favorite again performing?
See, ultimately, if you again see what happened in one, last say year, was that in infrastructure, in defense, in railways, was that here the main spender is the government, right? Because last year was election year, you had pretty heavy monsoons, the spend had been curtailed. Now we've seen last month, this month, we are seeing again, say in railways that, like you mentioned, we are seeing Kavach orders again restarting.
Yes.
Much more is expected. So the news flow is going to start. If you look at the budgetary allocations, right? People are saying that the budget was not increased for railways or for other infrastructure. But if I look at what was given in the last 2 3 years, a lot of it has not yet, the execution was not there to support even spending what was allocated. So I think if the focus is now on execution and on getting actual work done on the ground, that is more than enough to sort of boost these spaces. So I think again, like medium to long term, very positive on railways infrastructure, the
Okay.
entire domestic capex story.
Okay. When we're talking about the domestic capex story, how would you place power, sir? I remember in the initial part of 2024, you gave us names like Genius Power that turned out to be multi-baggers for a lot of our investors and viewers as well. Is the power story coming back into action? We are just seeing the summers also knock our doors. Do you think this space will again garner some traction in the new year?
Again, I mean, I would put power in the Indian domestic capex story.
Okay.
If you look at what are the primary consumption needs that a country goes through when per capita income starts growing, which is what is happening in India. One of the first things that happen is we start consuming more and more power, and that's what we are seeing. The more improvement that we see in rural areas in consumption, uh, we'll see much more improvement, increase in power consumption, and then it needs to get broad based. The other thing that is happening is we are trying to move to renewables, and that's a long term story, but that also requires sort of front ending of all the transmission distribution kind of work, right? So you need to set up the transmission lines, you need to have distribution setups that happen. So there is going to be money that is going to be spent in those areas. So again, that's a very interesting play for me over. But these are all long-term stories. How you're playing it in the short term is short term anything can happen. That's the point.
Okay, fair point. So, point taken on the power space as well. Today, again, there is some action on the power related stocks. So, like, Power Grid Corporation, that's up by 3%. It's the top mover on the Nifty. Even in the F&O space, you have renewable energy names like Solar Industries, that's up 3.5%. JSW Energy in the morning, it was even Power Grid that was moving up. So the space is showing us some traction at this point in time. But let me just shift gears a bit and ask you on the consumption story. And FMCG, consumer durables, consumer discretionaries at large is what I wanted to come to. We are just about 20 days away from finally the budget announcement kick-starting to take shape with the tax cuts that were announced and the bonanza that was announced. That will start to happen. So people will get extra money in the hands and that was supposed to spur consumption. Which are going to be the key beneficiaries of that? How are you going to play that theme in the new fiscal year, sir?
Personally, I'm not very keen on FMCG. I think the challenge with FMCG is that we see two trends. One is that there is a lot of D2C brands today which compete with the larger brands, larger listed players, right? And these D2C players, these local regional players are not listed, but they are taking away market share from these larger players, right? So that is one trend that we are seeing. The other is that purely from from a consumer perspective, I think a lot of consumption now has moved beyond the traditional FMCG, right? The penetration to my mind for basic things like soap, shampoos, toothpaste, etc. That has sort of reached saturation, and you cannot uh, get too much of growth from there. So FMCG, I'm not very sort of keen on. What I think is we probably in a maybe one more rate cut this year we can see. So with additional money in the hands of people, we might see home buying pick up. So home finance companies which are catering to mid segment, lower to mid segment, salaried people, that could be one interesting area within the financials. Uh, Consumer durables, right? Air conditioners, those kinds of players could be interesting. Even maybe for that matter, personal vehicles, cars, motorbikes, those could be beneficiaries of the tax cut.
Okay. So when we talk about cars and bikes, sir, what's your own sense on what's happening with the autos, especially four-wheelers? I mean, the likes of Tata Motors, the likes of M&M, these stories that had run up, pretty sharply, and then there were so many investors that are now stuck at higher levels. They've seen their, value depreciate by what 20, 30, even 35, 40% as well from highs. How would you advise them to look at it? Because these are leading players in the Indian auto industry. At no point are they going to be shutting down. There is an innovation that's continuing as far as the EV space is going. But, of course, probably the stocks have run up ahead of fundamentals. Probably there were too many headwinds now. How are you looking at the auto space, and what would you advise those who are stuck at higher levels on some of the marquee names?
So I think one thing is that we have to be very clear that uh, autos are cyclicals, right? So you cannot just go in and buy at it and buy auto companies at any price. Just thinking about that okay, Mahindra is launching this or Tata is launching that and so on and so forth. It's a very competitive field today. We have a lot of players, and with EVs, it's going to open up to a lot more players. I mean, what happens if tomorrow we have, say, some of these Chinese players being let into India, or other companies, Maruti gets more aggressive with their hybrids, or they start launching EVs. So, I mean, the point is that this is a very competitive field, and you cannot just take a blind bet on that. Better way to play uh, is actually, to my mind, two wheelers, because the number of players are limited, and also through the ancillaries, because the ancillaries uh, have very diverse businesses. Sometimes pretty robust, because they can sell to the OEMs, they can sell in the aftermarket. So they are some of these larger ancillaries have more resilient businesses.
Okay, fair point. So that's as far as the auto space is concerned. We'll come to a little larger pack stories as well. I'll start off with the banks first, sir. Banks and financials were seen as the stories of the new year, probably. That would provide an extra edge to investors, something that could unfold to be the outperforming spaces in portfolios. This script hasn't played out to the T in the first 3 months of 2025, but does it still give you the confidence of going big on banks and financials at this point?
I would, but yes, I mean, some of the larger private sector banks, even public sector banks, also the larger ones like SBI, etc. They can do well. They can maybe perform slightly better than what the market does. But would you sort of bet your house on some of these? I would not do that because the fundamental problem of credit growth, pickup in credit growth, that is not happening all that much. So you don't want to get into this business right now, where even now I think valuations are relatively cheap, but they're not in absolute terms cheap. Growth is not there to be seen. So is this something that, and for me, I am more concerned about industries or businesses that can grow because that's where I think most of the value unlocking happens. So unless some of these banks can actually show growth, I would not be very interested or very keen in them.
Okay. Let's also discuss some of the other spaces like IT, for instance, sir. What has gone wrong with IT is what I wanted to know from you. Too many headwinds. Of course, there is this external pressure from, changed policies in the US with the incoming of Mr. Donald Trump. Do you think IT, because of its outsourcing nature and its biggest business being in the US, is likely to continue to face pressure of these external shocks?
Yeah, I think, see, IT, there are multiple headwinds. First headwind is, of course, nobody knows what the dollar and I mean the rupee dollar is going to look like. So that is a very big question mark whether it's going to go up, down. That's going to make some amount of difference. The second is we don't know what kind of tariffs, etc., if any, that are going to come in from the US. And thirdly, I think people are still trying to figure out how AI is going to change the business models of the Indian IT service companies, right? Because a lot of coding now can be done using these AI tools. So, do we need to have so many, coders in some of these IT services companies? The answer definitely to that question is no. And when I hear some of the top management from these IT services companies, they are also talking about having higher output from lower number of employees. Now these have multiple trickle down effects on the Indian economy because IT is one of those industries which employ a large number of highly paid or at least relatively highly paid employees. So if the intake of people in IT reduces, then it's going to impact the Indian economy fairly negatively. Other than that, purely from the IT sector standpoint, uh, the short term future is fairly clouded. Medium to long term, again, I mean, you will still need coding services, you will still need applications to be built, systems to be maintained. So, at a broad level, things will be fine, but you have to be very specific, specifically looking at companies which are more getting productized, which are, getting the benefits of using AI in their services. So that's, I think, where we need to be focused on. But yes, challenging times for IT. It's not going to be easy.
Fine. So that's as far as the IT pack is concerned. Let's also discuss, some of the other spaces. Since we are talking about these external shocks, commodities and metals is what I was coming to. How are you assessing the situation on the metal space, particularly with China continuing to step its pedal on reviving economy and growth. With their stimulus coming in, they are keeping their projections correct. We've seen what's happening with their indices as well. Sharp rallies across Hang Seng, ETFs rallying as well. What exactly do you think and foresee for the metal space that's closely connected to the world outside?
It's a very, very difficult call. I'm not a metals expert. I'm not very good at following the metal industry because there's too many short-term, gyrations, too many pushes and pulls. Very difficult because today you're talking about China demand. Tomorrow something else, somebody else will put tariffs. India will put tariffs. So the price etc. is so dynamic. It's very difficult unless you are following it on a day-to-day basis. So I have unfortunately not too much of an idea of what is going to happen to the metals.
Okay, got that. So that's as far as the space is also concerned. Let's look at what's happening. We're just 3 minutes away from the day's close, and we are 100 points lower in trade. Just before we let you go, could you tell us, Mr. Basmalik, what exactly should investors keep in mind, even if the recovery is going to be starting off? What are the mistakes that they should avoid at this stage?
I think first thing is, always whenever you're investing, the first and most important thing is be very clear about what your objectives are and your time horizons, right? If you have a 3 month time horizon, don't buy stocks which are going to give you returns 5 years later, and vice versa. If you have a 10-year time horizon, don't be really worried about day-to-day fluctuations in the stock price. Second is look for look at companies or look at industries where there is possibility of sustained growth over the next 1, 2, 3 years. And lastly, I think, and probably most importantly, don't go in and buy everything in one go. Just stagger your buying, and if at all, stagger your selling, and move away from stocks where you think uh, growth is not going to be there, even if you are at a loss, right? There's no point in holding on to a loss thinking that I'll sell when I get even, because ultimately that capital that you're holding on to has an opportunity cost. So you take the capital, deploy it in another opportunity where it can give you better returns over the next 1, 2, 3 years.
Okay, fair point. Well, Mr. Basmalik, thank you so much for being with us on the show and helping us with all your insights on the markets and the outlook going forward, the strategies that will be helpful, and where investors must stay absolutely cautious of, even in this current recovery in the markets. Thank you so much. Appreciate your time as always on Business Today. Well, viewers, after 2 days of a rally, it could be a down day yet again into the markets. We are starting off this truncated week on a low note, 113 points lower as far as the Nifty is concerned. We've given up 22,600 today, given up 22,500, and now we are below 22,450 as well. 110 points lower on the Nifty. The Nifty Bank is also slipping, and you can actually see almost a 0.6% cut on the Nifty Bank, 48,173. It's the same story that's probably played out post 2 p.m. Into the markets, a sharp fall, and then even the slightest of recovery has not been able to pull back into the markets. All the sectors barring FMCG end into the red, with 2.4% losses on realty. PSU banks down 2%, consumer durables down 2%, oil and gas 1.9% lower. Mid and small caps also sharply lower in trade, with the small caps losing ground with over 2.3% of a sharp fall in the markets. Autos down 1.4% as well. You're seeing pharma stocks decline by 0.6% in trade. IT also down by 0.5%. The gainers on the Nifty are limited to Power Grid, HUL, Infosys, Nestle, ITC on the top 5 names. So you can clearly see it's the FMCG names. The safer havens are being seen as places where people would want to latch onto in this decline. There are some pharma space stocks like Cipla, Sun Pharma also up and about, and SBI Life and Asian Paints are the other heavyweights. Just about a handful of stocks that are into the green. Rest have slipped, with oil and gas now losing over 4% in trade. Trent losing 4%, IndusInd Bank losing about 3.5%, Bajaj Auto, Eicher Motors, L&T, the top drags on the Nifty today. On the PSU space, only Power Grid holds up. Rest of the spaces which were up earlier in the initial part of the day, the likes of HAL, BL, they have all slipped into the red, even the likes of NTPC. You're also looking at the broadest index where there are some names that continue to pull up in despite this market. Solara Active Pharma Sciences 18% higher in trade, very strong move today. Wellspun Investments about 18% higher, very strong move. Bodal Chemicals 15.6% higher. Lipsa Gems and Jewelries 14% up. You have many other stocks like even Sarda Energy. You have stocks like Arcade Developers, names like Swan Defense, Axis Cades Technologies. These were the pockets that are actually up and about. But on the declining side, again, there was sharp fall also in higher digits that we have actually seen for precision camshafts, for instance, for Nandan Denim, Triveni Turbine, that was moving up in the last few trading sessions as well. So many stocks have actually slipped into the red in trade today. We'll leave you at that. What we'll do is we'll continue to track the market move for you throughout the course of tomorrow and even beyond the market hours today. The coverage on business and economy continues on the other side. So stay tuned with us on Business Today Television.
Good afternoon and namaste, ladies and gentlemen. Welcome to Business Today's very special show, Market Gurus, where you get to meet the finest brains on the last